Okay, well, Sunday, November 20th, we're in the Thanksgiving week for the US holiday, and we got a few things going on as we get ready to close the last month of the fourth quarter um, for the Forex market, right? As we get into Thanksgiving. So let's go over a few things that's going to be happening this week and things that happened last week as we went over in live trading room. We got some great trades and we got some good trade setups. And it can continue to be good trade setup, and there's more as we continue to just ride it and ride it and ride it and ride it through. So let's go through that right now. Okay, so for this week, we don't expect anything for Monday other than the normal trap day, right? Just normal day setup from traders who got trapped on Friday. So we really don't want to take any new trades on Monday, to be honest with you. If you take any trades, it's trade that was already in your trade plan. So in other words, reloads or resets, trades that you've already had, and it just came back to that placement, or it's a trade that you already had set up waiting for it to come to that particular price. Okay. On Tuesday, we got the Reserve Bank of Australia speak. That's really nothing. Core retail sales might be something, but it's an orange folder, so that's on Tuesday. That may move the currency, but the biggest one will be that evening, right, at Tokyo opening. So if you want to know what's going to be moving New Zealand dollar, tune in Tuesday night, 8 p.m. Eastern time, whatever local time that may be in your time, and tune into your chart on NCD USD, NCD CAD, NCD JPY, NCD Chef, odd NCD, and watch something move. And most likely it'll be the pairs, those pairs specifically for NCD. Oh, also Euro NCD and Pound NCD, right? You definitely want to tune into those because those currencies will move. So we'll take a look at those currencies in terms of where they're at, because Tuesday will be the pivotal point of where price may go or reverse, right? And or confirm for a setup or confirm for an exit. Okay, so that'll be on Tuesday night, right at Tokyo Open for NCD. And believe it or not, it'll also affect Australian dollar as well. So just be aware of that. But other than that, don't expect a lot from JPY pairs on Tuesday. Obviously, it's a Japanese holiday, so it'd be low volume on Japanese pairs. So that means it's not that it's not going to move. Just don't expect, 150% or even maybe close to 100% of all JPY crosses ADR. So in other words, if like, for instance, USD JPY is moving about 80 pips in a day, you can expect close to 80, but don't expect anything more other than that, okay? So Wednesday, after the NCD, we'll move into Asian sessions. You'll have Euro PMI. So that's gonna make an impact during London session. So that may move the pair, either weak or strong. And then you have fast manufacturing PMI. That'll move those pairs. So Euro and Pound may move on Wednesday. Now, which way will it move? We're going to have to take a look at technical charts to understand what we project and estimate and anticipate what's going to happen with any of the Euro and Pound pairs. We don't look at the news to predict, because we can't be Nostradamus of Forex, right? We can't look and say, okay, French PMI is going to be bad, and therefore we expect blah, 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 and therefore it's going to go up. Nope. All that means is on Wednesday, London session, expect some movements on Euro and some Pound. That's all we can do. But based on the technical, we can get to a place of an anticipation of where we believe the pair is going to go based on where it's located on the chart. For example, if it's at the top of the freaking range and it's been riding that for a couple of days and it's starting to create some type of bearish pattern or reversal pattern, and it's having a hard time breaking a structure, it is most likely going to reverse, right? Especially if there's a key order block or an imbalances that it may need to mitigate. That's a clear example of what I'm just talking about. Okay, so moving on to mid-Wednesday, US news, we have core durable goods unemployment claims, that may move the currency or start to move the currency. And then about 9:45, we got flash services PMI, fundamental news, and that's going to move the currency and indices. So as U.S. market opens at 9:30 for NAS 100, US 30, S&P 500. So those all will move the currency around that time as well, especially gold. And if you're in Bitcoin or any type of crypto, that'll also move as well. And then we'll wrap up. Wednesday, it's going to be a full day. So at 2 o'clock, you got the FOMC minutes, and that would be reports of the Fed for the US coming out from October's report. So we all know that they went up in 75 basis points in October, and therefore there was some meetings afterwards, or the notes. They're going to reveal or release the notes in terms of why they increased the interest rate, what other things they're looking for, what other reports that they're showing, CPIs, inflation, GDP, blah, 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 anything from economic news, and what they expect to do in the coming months, possible more rates. So it all comes down to what the report will say. Is the report more hawkish, means more positive and more up rates and increased rates, or is it more dovish, means more negative and concerning and blah, blah, blah? And that will move the market up or down, but not so much of the dollar, because that would be already be moving from 8:30, about 2 o'clock. The only thing in session is New York. And that's going to be about 25% of the market volume, right? London's already shut down. And Asian session obviously is not even in, they're just all New York. So the majority of the market will all be weighed into the indices market. So S&P 500, US 30, NASDAQ, those will all move around that 2 o'clock time, all based on this report. So if you're trading indices, and I do trade indices, so I'll be looking for and maybe a quick, maybe a news opportunity breakout from up or down, depending on where it's at in the market, and see if I can grab an opportunity there. And also US oil, right? So they'll move. Gold also, yep, gold will also have an impact around that time. So it's important to, if you're in a trade with gold, as some of my, as I am, and some of my traders are in gold, we're looking to have a little bit of pullback on gold before we get a little bit upside. At this point, it may be at that point where gold may be time to either take profits or wait for that reversal that is going to start being bullish, right? So we'll all see. We'll take a look at the chart. So that'll be on Wednesday. So there'll be some big movements. So for those who are watching this and planning your trades, make sure you make a star at 2 o'clock Eastern time for those particular currencies and look for those trade setups or managing a trade. Okay. And then other than that, that'd be it for the week, because we all know Thursday is a US holiday, right? So an official bank holiday. It'll be Thanksgiving, and expect very low volume on US New York time. London will be moving. So whatever happens at 2 o'clock on Wednesday will carry over to Wednesday. I'm sorry, to carry over into London session early Thursday morning. And I would say don't expect during holiday trading of any type of reversal, right? So whatever happens at that 2 o'clock time will basically just be more of a continuation, if you will. It'll be more of a continuation. So if if on Wednesday night the gold was more bearish, and that news just make it bearish, and as it starts dropping, expect London session to continue on with that bearish push, right? Don't expect more of a pullback or an opposition of that trade. So it's more of like a path of least of resistance. So whatever is going on, it's just going to keep going. So in other words, doing holiday trading, you're going to see more trending versus more pullback and oppositions and reversals, manipulations, okay? And that's because majority of the institutions and institutional traders who really manage in a lot of the millions of dollars, it's not even in front of their screen during this time, right? So they're like at vacations or with their families already. So it'll just be more of a continuation of the trade, and they know that, right? So when they get back, and then they'll probably go ahead and hit the stop buttons and start manipulating, going the other way, right? But they all have their marching orders, right? So whoever's taking over each accounts or currencies and managing the account, they all got their game plan. They already have their orders. So the lower class or the entry level trying to make their name, institutional traders at institutions, are probably managing the accounts and just allowing the play the game plan of whatever that may be. So in other words, don't worry about trying to be too manipulated and looking for reversal. Most likely it's not going to happen during holiday season or holiday trading. Okay. And that should be it about Thursday. Even though low volume when it comes to New York sessions after New York comes in. And Friday, expect the same, right? Just kind of a normal ranging conditions, nothing showstopper, no breakouts, nothing is going to be of a clear reversal, and then we'll close out Friday. Okay, the week after is when we're getting to the swing of things for new November, right? Because we have the GDP, we have USD jobs, JOLTS, GDPs, as we get ready for bing, 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 non-farm payroll on Friday. And that will significantly move the market the week after. As we get ready to close out the year, it'll be more of a continuation of the market in terms of where we're going to be looking at right now. And the question would be, are we going to be seeing that that rally in the stock markets and the indices market closed out the year? Are we going to come back and get at least 50% of that pullback that we're looking for in the dollar weakness? Or what's going to be going on as we close out the year and get ready for the 2023 year? Because the 2023 year, it's going to be a wild ride. Towards the end of the year, we're going to be getting ready for the new elections of 2024. I believe Donald Trump has announced that he is going to be entering the race for the Republican. And, you know, I think with the shoddy economy that we had under our current president, US president, you know what, most likely you may see, I'm not trying to predict this. I'm not saying I'm a Trump fan or I'm not opposed to Trump fan. I'm just saying it wouldn't be surprising to see that Trump may make it back for the second term for 2024, right? Okay, so let's go into the charts. And let's see what we see, starting with the dollar, as we always do. Okay, let me minimize that. This is looking at the daily from an overview. This is all of our marking. We got the premium, we got the discount zones here. So I'm going to zoom in a little bit so I can get you guys to see this a little bit. All right, so first of all, we are definitely oversold. I think everyone can see that. We're pretty much at the bottom of the momentum. So that nice momentum push was really nice to see. And we're basically in bear territory, and it's starting to show a little bit of green on the daily, right? This is what we've been waiting for. If you think, just look at this real quick. I'm going to make this, I'm going to adjust this real quick. And I want you to look as I squinch the market. Okay, look at this slope in relations to the oscillations of the RMI and our stochastics. So I got RMI and stochastics in this line here, or this indicator. And one of the things that you're going to notice is during that rally from, let me see if I can mark it here, from June, about June 2021, right? Obviously, it was more bullish than that, but around this time is when the market came from oversold, and this was more of that pullback. It was really just literally a pullback at that time. But from June on, and if you look at the oscillation market here, the oscillation indicator down below, what do you notice? You'll notice that we've been having a lot of bullish momentum. So basically, everything above this 50%, right, it's been bullish. Well, That's exactly what we saw here. That nice bullish trend that just stayed above that line, got a couple dips here, right here, but with nothing significant as we see what now, right? So it barely dipped below that 50%, and those were just more of a manipulated pullback, right? That's all that is, right? And you got all of our moving averages are 50, 100, and 200 moving averages just staying on that bullish trend, right? Now, at any time, it could have dipped at any time at some key levels. Well, guess what? Did we dip? Oh yeah. Except this is more significant than this dip. And the significance is this location versus this location. Okay, I hope that makes sense. So we're well extended into the market, basically what it's saying on the dollar. And what we see here, you can see gradual drop, which signifies more of a pullback versus volatile drop, come back, another volatile drop, pullback that did not create or take out the previous highs, you can see right there. And then another violent drop and another violent drop, and it's breaking key structures versus this nice little gradual drop, you know, maybe broke one key structure, but came to a major key structure and then basically reversed, right? Here, it broke this structure and it broke that small structure, and it came all the way down to this order block, okay? So that right there is a very strong sign of not a pullback, but a change of character. This is a good, strong sense of a reversal of a bear market reversal from the bull, okay? This is the strongest evidence technically that we can see. That really doesn't mean 100% of anything, okay? So just remember, when it comes to trading, nothing is of 100%. It's all based on probability, okay? So when you see this type of reactions and you see this type of market structure on a daily time frame, right? This is not something you see on a 15 minutes or 5 minutes or 1 minute. You see this every day, right? So you're like, that's nothing. Yeah, just keep in mind, we're looking at it daily, right? And if you pull it on a weekly, you're even seeing more sign of a reversal here than you saw this, right? This is just few weekly candles, 1, 2, 3, 4, that probably just kind of nice little pullback. These are very strong. Look at this 1 week candle here. This 1 week candle drop just ate up and faded 1, 2, 3, 4, 5, 6 candles itself. So 7 weeks, basically 2 months of candles were just eaten up from a movement scale perspective in just one candle. Okay, so when you see something like that, that light bulb needs to go over in your head and goes, oh my God, this is a very strong sense of reversal. Are we there yet? And I can say with a very high probability, yes, we are, okay? Again, doesn't mean 100% anything in regards to, yep, what Leonard said, that's right, or what we're seeing is absolute, because this thing can go turn around and go the other way. What's the likelihood? Very low probability, but anything is possible, right? Like I said, it doesn't mean much of anything other than there's a high probability we're looking for that reversal. And with that, we're going to play into it until something else proves to us otherwise, right? Okay. All right, so last week, let me see, I marked this chart, I left this alone. So this is what we were looking at last week. So we were looking for a pullback up here, or possibly a pullback to this area, right? Because we have a couple imbalances that the dollar has created. Now, again, the reason why we're spending this much more time on the dollar, because this is quickly, once you understand this, just quickly translate to the correlated and uncorrelated pairs related to the stock market, Bitcoin, gold, and any of the related USD pairs. And you basically covers 30% of everything you need to be trading or analyzing in the market, which is about 80% of the market volume of the $6.1 trillion market, right? So if you cover 80% of the $6.1 trillion market by just looking at gold, I mean, just looking at the dollar index, you really, anything else is more supplement if you're just bored, right? So we'll wrap it up right here. So as I said, I had this pulling back from last week's Sunday analysis when we saw this big drop, and you can guess it. This is a daily candle, so let's count. 1, 2, 3, 4, 5. That was 1 week. I know, right? It took 2 days to drop, and we're looking at 5 days, and this thing barely even moved. It didn't even come back to what we thought, right? That just shows right there, you know, market happens. It does that. It'll do some crazy move, and then for 5 days it doesn't do anything. And you would expect, boom, that's true. Guess what? It is still coming. So as the market is moving like this is a purpose of it moving. It's obviously it's not going to just come down and go right up right away, right? Because you have some savvy traders out there who can easily spot that. Think about it. I mean, even if you just go down, up, down, up, even that will probably catch some of the traders out there who can say, "Oh, that's an easy trade, right? Oh, that's easy. That's right here. That's not easy because it's coming down. Okay, it's going up. No, it's coming down. Or it's really coming down. No, it's going up. No, it's really going to go up." So it really trips up a lot of traders. So what that does is creates liquidity, and it builds up and accumulates orders because it's trapping traders who ready to go long, and it's trapping traders who panic selling, thinking it's going to come back down because they missed these two lines because they were trying to catch the move after it happened versus as we were looking at it up here, we were looking at it up here, we were looking at it up here. In fact, we were looking at selling since right here, okay? So this is not surprising to us as it is to a lot of traders who's going, oh, smack, they're getting caught flat-footed, and now they want to sell. Oh, well, they're not sure because they don't want to get burnt like they got here. Stop loss guy here lost a lot of money because they went here. They're going to wait till it gets about right here. They're going to wait till it really comes down to breaking whatever support and resistance they have, and then they're getting liquidated because now it's going up, going down, going up, going down. They got to be careful. Pay attention to what I'm saying here, and hopefully you don't get trapped up in that same type of trap or that mindset of chasing a trend versus anticipating and waiting for the trend or waiting for the trade to come to you by following simple market structure. Now, in our live trading room, obviously we get down to the lower time frame and we're looking closer at key confluence other than just market structure, okay? So the game plan, believe it or not, I'm going to leave it here. It has not changed, and all of our traders are still waiting for that potential pullback as we could look for mitigation to this imbalance back to this kind of mild order block. But this is a strong order block. We could be seeing this because there is a small balance here, right? So when did that happen? Our trade room, we're probably calling it, we'll probably start to see some of it this week, but we believe that December 2nd, non-farm payroll, the week after, or during that week, we may see more movement. And during that time, we'll make a decision of when we believe it'll be a good time to get ready to short the dollar, which means that we'll be looking to long Euro USD, long pound USD, go long on odd USD, NCD USD, and therefore short USD JPY, get ready to short USD SHEP, and then get ready to short USD CAD, okay? All right, so that's it on the dollar, and that's what we're looking for. We're just going to stick to this game plan. We're going to see how far the market's going to get ready to go up. There is some key structures here that we're looking to say, hey, it may just come up and say that's good enough. They got enough orders, and they're not really worried about that little small imbalance as versus this one. We got a little small imbalance here. So it may come up, get these two imbalance, maybe poke themselves up a little bit with a wick, get a lot of people to start panic buying, because obviously you're not going to buy here, right? They've been accumulating here. and they're not going to buy it here, and they're not going to buy. They wait until it's so clear that everybody else can see it. And then by that time, the market makers had already made their next move. In fact, they know what their game plan is already. And guess what? We can kind of estimate based on market structure and based on what we're seeing, based on past previous history, that market makers came here and took it down, kicked it down. Obviously, they did a 100% retracement and did further than that, which is normally less than 12% of the time that it actually goes higher than 12% of the confluence of Fibonacci on a higher time frame. And it was very, very much extended, extreme market condition. And we're waiting for this target. That's that 50% mark, that snapback we're going to expect to see. And from there is when we'll decide to say, hey, okay, once it comes back, then we're going to start playing either on both sides or start looking for possible further downside when that time comes. So are we going to continue to short it? And now we're looking at this particular target again, and then go back into the normal range of thing. We will see then, but until then, we're not looking for anything else. If we were to be one-sided bias, we're shorting, and we're going to continue to be on the short side of the dollar as we start to come to the end of the year and the beginning of the year, as the dollar start to taper off from inflation, from the increase of interest rate. And this week's minutes at 2 o'clock on Wednesday will be a further indication of what the Fed is going to do. There is going to be one more rate increase for the month. And looking at the Fed rate increase here, go ahead and pull it up. So the next rate increase here, if you go to CME Group, this is the CME Group data. So Chicago Mercantile Exchange, they do a pretty good job in predicting of what they believe the market's going to do for the US dollar. So coming up on December 14th, right, which is the week after next, there is a 75% leaning probability from all of the investors that they believe that the Fed is going to go about a 50% basis point increase versus a 24% believe from a weight of, the decision of the survey, and believe from the confidence of what the investors believe, there's a 24% chance right now that they believe it's going to be a 75% versus 75, a whopping 75%, that's going to be about 50% basis point. Now you got to think, the interest rate is already high. We're already about 5%. I believe, let me see here. Interest rate. So we're at about 4, 4 and well, we're already at 4, right? So we're at 4 right now, and we're looking at about 450. Just to make sure I'm accurate here in terms of what we are and where we're getting ready to go. So on the 14th, we're already okay. So we're at 4, right? So yep. So we're at 4%. Just wanted to make sure. We wasn't sure if we're at 4 or 4 and a quarter, but we're at 4%. So there is a 75% likelihood that we'll see a 50% basis points, which I see that they're probably most likely will come to that, and that would definitely maybe weaken, right? And if it's already built into price, I would say we probably won't be seeing a shocker. There is a small chance that they could do one more 75 basis point and shock everybody. And if that happens, yeah, that might be enough, or enough of the push to go ahead and push this dollar all the way up here if it's not already there. Okay. If they come in at 50 basis point, then this thing will probably just come back around just like it normally does and said, okay, interest rate is not going up as high as what we like. And therefore the market will just continue to react and fall back to the normal things of technical analysis. Okay. Let's move on to the other parts of the market. Let's go to S&P 500 and see where we're at. So I'm going to go ahead and delete these lines just to make sure I don't confuse a lot of people. So we're right where we believe we were looking for. Okay, so we had called this to come back up and it did. However, I got this marker here that says the market is going to be pulling back. Now, this is that same 5-day range, right, that we saw in the dollar. And we did get that little bit of a spike that covered at least 50% of this imbalance, but this imbalance is still very, very strong. Don't forget, we still have a little, no, maybe we don't. Look at that spike. That spike came up, kind of covered that imbalance. Look at these markets, boy. They're pretty good. There was a very key imbalance here, right? And they did that spike, and that pretty much mitigated that. So in other words, they only have this one to come in and kind of help, and say, okay, let's go ahead and close this gap, this little mitigation of here, this fair value gap here, come back from a market structure standpoint and possibly play in this area. And then obviously that's going to be with the dollar strength, come back, mitigate this, get traders to think that we're going to go short. We're already pretty much in the overbought condition as well. And let's come back down. And then maybe for the CME December 14th, maybe non-farm payroll, come back and let's rally, right? Because this rally right here, if the dollar drops, boom, we're coming back, right? And then we'll probably be ending the year historically in the record for a market corrections of 2022 for basically 27%, right? So market 27% stock market or indices market corrections of 27%, and believe it or not, that's the average, right? So that's right on point. We have not come back to break this structure, higher highs, higher lows, higher highs, higher lows, and then we rally, okay? So that's going to be the same for US 30 and NASDAQ. S&P 500 is obviously the leading index for the NASDAQ and US 30. So they're all following the same similar pattern. Okay. Okay, let's go to gold. All right, look at this. So we got this structure here. And this is very, very key point for those who trade gold, those who does not trade gold, or those who following gold, or those who like to get into gold, right? So this is a very, very key point. So this is on the dating, and let's look at gold. So we had gold break this structure here, right? This was a key structure of 1670 to 1675, and it came back down all the way about 1614, which was a very key structure here. You had this little piece of spike before it came back down, and a lot of reactions here. And believe it or not, we did touch this twice, create this nice little double bottom, W reactions on a higher time frame, and then boom, shot up, right? Obviously, that is with uncorrelated to, I'm sorry, it's more of a triple bottom, right? Came down once, came up, came down twice, hopped, came back down. So we did touch this area 3 times. All right, so when you get that strong touch of 3 as a charm, right? That's when you know, hey, this looks like this thing is going to go the other way, right? Well, not just because it's 3 times, it's 3 times in the oversold conditions. So when you have that, boom, we're going to, I mean, what other way you're going to go? Keep getting down, keep getting down? It could, but the higher probability is going to go up, and guess what? It did. All right, so it went up, and it went up kind of fast at a very nice 70-degree angle. So when that happens, you can see where we got our premium, we got our discount. We're looking for that little nice kind of a snapback here. So there are some pockets, some fair value gaps and balances that I just highlighted here. This has not changed. So we did not reach up to this particular spot here of 1806. We got about as high Let me see if I can get the high of the day and high of the week of 1772. So 1774 is about the highest we got here. This indicator is just pulling up, which is good. So we still have this area to go, and we will go there. So as you guys can see, we did break some key structures, which is good. And this key structure is showing us that this is a definitely, right, change of character. However, it can't just keep going up. It'd be too easy. Too many people will make money off of gold, and then the market maker's going to be like down. They got to make money by manipulating people. So once they hit the stops here, they did a pretty good job of hitting the stops a couple of times, right? It went up a little bit more. People started selling. Guess what? I'm really going up. And then people started buying because they saw this jump. And this was a nice candlestick when it did jump. So that wick was a candlestick. Unfortunately, they don't know the difference of what happens when they see a strong wick, especially if something's going this high. It's just not going to keep going if they're not looking at the uncorrelation to the US dollar. But for us, we were shorting it and looking for shorts. And if we got stopped out, we were looking to get back short. Guess what? It's in our favor, right? So we're in the money, and we're looking for gold to possibly drop down to cover this mitigation. There is a possibility it can come to about 50%, right? This area right here. And believe it or not, it can come even lower than that. But we know at least we are coming down. So there is a couple areas, higher likelihood, just 50% before we go back up. But there is a great possibility, but it could just spike down, and then go back up, okay? So other than that, right now, believe it or not, it is still a good opportunity to get to a short. However, obviously, it would have been great to short up here, but it's hard to short when you're seeing this much bullish going up. If you're not used to reversion trading, right? If you're not used to trading, knowing that you should be trading from the top, you sell from the top, you don't buy from the top, and we buy from the bottom. So if you, right now, it moved, but it's still an opportunity for short, not that much movement, but it could come up a little bit, spike up a little bit, and then come back down. But I am looking for a possible area around 16, maybe 1700, around that area. And this is where I'll be looking to buy. Until that happens, I'm not going to buy here unless it breaks the structure. But we are definitely coming to, we're going to see 1800 and the days of 1875. Oh yeah, it's coming. And that's going to be great. So we're going to be back to those record high, and then believe it or not, we not sure, but we could be riding this for a little bit, right? Before we come back up, right? So there's a dollar for this to happen. We need a dollar to continue to be weak. And then for this to happen, we need to get dollar to even be even weaker, right? So we may play this for a little bit. It'd be more like this, to be honest with you. We may come up here, we may test this, and then do this. Who knows, right? Before we come back up. But the likelihood of the dollar continue to go up as long as the gold, for gold to continue to be up, we need a dollar to continue to be weak, okay? So that's what we're planning on gold. We're going to be shorting gold. We're going to be looking for this area for buy. If you feel like you're a little bit too late to get into gold, that's okay. This is kind of a risky trade now because you would be counter trending. The long-term bias is long, bullish, but I am short-term. I'm bearish right now, and I'm bearish until it gets into this 17 area, and then I'm looking to be bullish again, and then we will back to the higher time frame confluence. Okay, let's look at another market here. Let's go to Bitcoin. All right. So this market is here from last week, and it hasn't changed. So we got a slight upward motion. So we got a nice little flag here, and we have not came back and broke the 15,573 low. We did come back around here about 16,399. So right now Bitcoin is kind of floating around 16,600 or whatever. So we're looking for Bitcoin to come up here, close this imbalance, but The currency doesn't follow imbalances, as you can see here. Look at this one. Look at this one, right? Doesn't really follow that kind of theory because Bitcoin is still, very much a speculated market, and especially when it's susceptible to FTX news like it did last week or the week after when it took this drop. No one saw this, and it's causing a lot of the miners to struggle. But regardless, it's oversold. Very good location to buy, just like it was here. It was in that below market. You can see it's the same thing like it was when we saw with gold, with dollar. I'm sorry. You'll see when it dips below that 50% here. Let me scale this up on the stochastic and RMI. Right, this is that momentum oscillator. So you guys can see right here. So we're in that 50%, and we were riding that low that whole time. So this whole time we were sitting up here. Guess where we're at? We were sitting right there. And then the market dropped even further. It barely poke out at a couple of places here on Bitcoin, right here, and then also right here before it dipped below. Well, we're there again, and we're a little bit lower. So we are looking for this to continue to be bullish and pop up, and hopefully we can make that move back and make that run back to where we believe the target's going to be here at 30,000. And if you were buying here and holding, buying here and holding, buying here and holding, this is another good area to continue to hold that buy and continue to hold that buy as we're waiting for the market to rally back up, right? And it's expected to rally back up, just like the indices market with S&P and the whole NASDAQ and US 30, right? Because it's kind of closely correlated to the stock market, and it's inverse correlated to the dollar. So if we're expecting the dollar to be weak, then expect Bitcoin cryptocurrency to rally. So will Bitcoin be the rally of 2023 back to, 2022 will be the first lever to say, yep, we're on our way back up. And then we're going to see 25 and then 30, and then going to be 32 and then 37 and then 40. So that is one position you definitely want to be in. If you were to place any trade in Bitcoin, anywhere in here would have been a great time to do it. And just hold on to it, right? Just continue to hold on. It's a long-term investment trade. This is not something you just want to get in and get out unless you have some type of algorithm that can just hyper scalp Bitcoin with very little out there. But it's a very tough market. It's a very tough trade to follow. It's a very great swing trade type of deal, but we're looking for Bitcoin to come back up. Okay. Let's get into, I'll look at oil. Let me look at oil real quick before we get into the dollar. Okay, I remember marking this up last week, and I said if this was 2 weeks ago, right? So I said if oil breaks this, we're going to go up to that, and guess what? It did not sustain. Guess what? It didn't go that high, and instead the market went the other way. So last week, oil was down here. 1, 2, 3, 4, 5. I think oil was right here. And I said, this structure seemed to be a very good resistance structure, even though these are two kind of an outliner, because they were kind of like an equal high, right? So you guys can see that kind of pattern here, where you can see kind of an equal high in 93, and then you see a 94. And then you see what we call an M pattern, right? So regardless, it failed this, it came back down. And here on Sunday last week, we said, you know what, this looked like it'd be a pretty good, strong resistance area, even though we have these two outliners. And we said, listen, so if the market opens on Monday, and if it failed to break this, guess what? I'm looking for it to come down. And that was my market from last week. And guess what? Did we go there? Absolutely. Absolutely. Now, the reason why I've also called that the sell is because of where it was on the oscillation. It was sitting there right in the middle, right on that 50 line, meaning it had to continue to go up and break that. And then I would have said, yep, I'll be looking for a sell. But once we got that drop, that came back down and came back up a little bit, and then we failed the break and we started going down. And I said, okay, once we break this, we are definitely going down. And guess what we did? So we're at that marker now, right? And we come back up, and I would expect to see a little bit of rally on oil, right? We're going to probably see a little bit of a rally. We'll probably, when I mean rally, just maybe more of a pullback here. I think we're going to come back around this area, and then guess what? We're going to come down. I think there's more downside to the oil. And that would also mean more weakness in CAD. So we may see a little bit of a rally. So I'm going to say I'm bullish. I don't sell the lows of oil. So for me, I think a better trade is to buy a little bit higher. So I would need to see oil to come up here. I like to see it come up here, or at least up here as well, but I wouldn't be selling it unless it comes up. So I'm looking for oil to bounce up a little bit, closer to between 85 and maybe $86. Right now it's sitting around 81, and it came as low as 80, about 78, right? It came that low, and right now it's sitting about $80, $81. So I want to see oil come back up about 85, 87, and then I'll be looking to short it here. Then we're looking for oil to come back down for some more weakness. And I'm eyeballing this right here for long term. It's that $61 level, right? So I like to see oil come back down here within the next few months. If it doesn't stay above this 88, right? I knew we were going to be in this range for a little bit. I don't think we're going to see this high again. If anything, and nothing goes crazy developing from the Ukraine or Russian, anything from there, as long as that continues to maintain where it's at, we'll come to the tail end of that. I'm looking for oil to come back to the downside of this oscillation, going down and get down to this level here. Once it comes down to this level of 77 and start dipping in this area, then this is where I'll be looking to potential buy opportunity. Right now, short term, maybe a little bit bullish from a pullback. Long term, I'm bearish on oil, and I got my eye set on this particular target here. Obviously, if you look to the left, for a very, very good key reason. Okay. Oh, more key reasons. Here, here. You can say that one here. A lot of reaction in this area right here. Okay, expect to see that coming soon, but obviously it's not going to come that easy. It's going to be more of a ranging down pocket. Okay, so I'm looking for more downside on oil, overall long-term bearish. Okay, all right, let's go to EUR/USD. Story stayed the same, nothing changed. Very little movement in the market this week, just 5 days, looking like the dollar. However, we're starting to see more bearish signs now. That peak has not been taken out for 1, 2, 3, 4 days. And once it hit that peak, which is a very strong order block area, it left 1, 2, 3 imbalances area. And we got to call that out, right? We got to call out these imbalances that was left from that move, which was a very good move. But as a result of that, these imbalances were left there to come back and possibly mitigate. So there's 2 areas that I believe that we may come down about this area. This is where I would like to see it. I'm shorting EUR/USD right now. So short term, I'm bearish to about parity. Right? I don't think we're going to get below parity. I think they're going to let this one go. They might spike down, but other than that, the oscillation looking like this, what do you guys think? It's just too high to buy now. We should be buying down here, right? Of course, right? this is not the time to buy, right? We sell into a rally, we sell from the top. We got two reasons for it to come down, right? Two main reasons, the imbalances here, and then reach this area of order block. And then I'm looking for this area to come back up. And we're going to be seeing the break of structure. We're going to see this break of structure here. We're going to see this break of structure. We're going to see this break of structure here as well. Okay, come back down to about parity, and then let's get ready to buy this, right? As we look for the dollar continued weakness, we're going to look for this Euro USD come down, and then right around, you know, is it going to be December 2nd, or is it going to be December 14th? Wherever that happened, wherever this looked like around that day, this is the time you want to look for. This is the opportunity where you're going to look for potential buying that to go back up. Okay, so that's Euro USD. Let's look at pound USD. Oh, same difference, right? So we're looking for, we got 1 versus the 3 imbalances as we did with Euro USD. So with this being said, I'm still, my market's still here. And I'm going to be putting it like this. I'll get that out the way for next week. So I'm looking for pound USD to pull back to about this market structure here, about 1.14. We could see it go a little bit lower. You know, don't be surprised if you see it drop below 1.14 to about 1.13. It could drop. Let me see. That's about 55 pips. Could it drop to about 72 pips? It's possible, right? So any of these areas, this is where I'll be looking to particularly buy. So if you wanted to short, this time is a good time opportunity to get a short, get nice little 50 pip, 72 pip drop. But other than that, when it gets in this, when it lands in that zone, right? When this area right here starts to drop, it's going to be around December 2nd, non-farm payroll, December 14th. NFP, not NFP, but the Fed's announcement will be the time to take it back up. And that's what we're going to see. But I'm short, very short term for pound USD, just like I am with Euro USD. I'm going to see it to about, like I said, my target is about 116 to about 113. Once it drops below there, then I'll be ready to ride it, and we're going to be right back. So higher highs, higher lows, higher highs, higher lows, higher highs. Look for a higher low. I don't expect to see a break of that structure there, because if so, then we're looking at a change of character, and that's not at the bottom of the market here. Let's look at the monthly chart. Come on, right here, $2.10 per pound USD. And we went all the way down to almost parity of 109 pound to USD. I don't think we're going to go any shorter than this, right? Not with the dollar expected weakness. This is the time we're going to be starting to start to see the rally now. Okay. All right. So that's pound USD. Let's go to odd USD. All right. So my market has not changed. It did not go as high as I initially thought, and that's okay. And we are already starting to see a bearish turn. And I am looking for pound USD to drop. And we have the Bank of New Zealand coming up. So this is, obviously, New Zealand has nothing to do with Australia. However, because they're closely related in countries in that area, we could potentially see odd USD pull back along with NCD USD. You can see where the market is pretty much way overextended, right? In terms of, not way overextended, but it's overbought in terms of the market. So look for this imbalance to get filled. I like to see it come down to about it's 0.65 to between 0.64 to 0.65 in that area. Once you get in that area, if you're not in the short now, that's okay. Wait and keep your button on the buy, because it's coming. And when it does, let's get ready to buy it from here, right? So in the higher highs, higher lows, higher highs, look for a higher low imbalances. Order block, we're going to go from order flow to order flow. Okay, nice, coming back. short-term bearish on odd USD and then going long. Okay, how about NCD USD? Guess what? I expect the same thing. So coming back to this area, I'm looking for overbought conditions coming back. We got an imbalance there. So I'm looking for NCD to come into about 0.59. So anywhere between these two areas right here. So between 0.57 and I will even say 0.59 to 0.57, get in that area, short-term bearish on NCD USD. So that means with the upcoming bank rate, I'm looking for that fall. So it's going to be mostly not so much of NCD strength or weakness. It's going to be more about the dollar strength coming up that expected to see a little bit of that pullback before we go up. Okay, so short term, I'm bearish on NCD USD, looking for that pullback to go longer, and then we're going to see some really nice momentum on NCD USD and RUSD in the coming months. Okay, so it's coming. If you can see and look at our monthly charts, we're down here. We're not up here, we're down here. And anywhere down here is in high demand to buy that up. You see that here, like what it did. It went here, here, what do we expect? And this is on a monthly, right? Kind of a macro overview. The market is way overbought still on a monthly. Now, if you go to the daily, it's short term, it's bullish. That means it's going to come back, mitigate, pull back, get some more money, and then pull back up. Okay, so NCD USD, I'm looking for a short-term bearish pullback and then get ready to go long. Okay, let's go into CAD. Now let's go to the base side of the currency. We're in with USD JPY. Let's go to USD CAD. All right, so for those who had bought USD CAD from last week, congratulations. Hope you made 193 pips, because it did, even though it for 3 to 4 days it looked like it was stalling, it is coming back up. Okay, it's on its way. It looked like the dollar will be able to still kick in. It is bearish, so if you're in the money, it's in overbought conditions still, which is good. This is a good place where you want to buy. Obviously, that was a good area, very good area of confluence here, good area of market structure. It didn't come all the way down to cover this imbalance, but we'll come back. We got this imbalance here, and once we get this imbalance, possibly mitigate it, right? It's all in this area of order block here. So I'm gonna go ahead and mark this imbalance here. This is a nice target. So anywhere in this area between 1.37, even as low as 1.35. So I'm looking for a little bit more upside to USD CAD, 1.35 to a 1.37. And looking for, once you get in that area, then we're going to start to look for a smaller confluence for market patterns, for more of an M pattern. We may get a little spike up here, which is fine. So don't be surprised and alarmed when you see that push come up on USD CAD. Don't think it's just going to go through the moon. Okay, this is on a daily time frame. We got this nice shoulder head. You guys can see that. You got a shoulder head shoulder, and that was a nice movement, right? So we're going to come back up here. We may see equals high, and then we're coming down. Okay, so short term, I'm bullish on USD CAD, looking for long-term sell on USD CAD. Let's go to USD SHAF. Whoa, that's nice. So if you guys took the buy from last week, congratulations to those who took buys on the USD SHAF. We're up 195 pips. You're in the money. Congratulations. So are we still going up? Yeah, it's still bullish, right? Still bullish, especially when you see the oscillation momentum of the market here on the RMI and stochastics. Whoa, we're way oversold, baby. Look at that, everything right here. That's it right there. What did it do? Did it go up? Did it go up? Did it go up? Absolutely it did. And that's where we're at right now. So There's a lot of imbalance here. I like that. That's good. So those are there's strong reasons why it needs to come up, right? So that gives you some really good reasons for it to come up when you see those fair value gap that just left there from all of the big cells that came back down. Okay, so we're looking for a continuation of the USD chef to continue up. We're looking at an area about, let's see. I'm looking for it to come up between 0.97 to 0.99. You can even go as about 0.99. Yeah, in this area, that's what I'm going to be looking for at the target to come to, and this is what we're going to be looking to sell, right? So anywhere in this area, look for that. If it come up short, don't worry. It'll give you some time to get set up for a sell, and then after that, we're coming down. I'm going to come down for a little bit here. Okay, we can come down about this far and then be in this range, right? We're just going to be in this range. Okay, so come up to about, yeah, anywhere in those area, and then we're looking to sell this thing back down. Okay, so that's USD chef. Let's go to USD JPY. All right, USJPY finally making that sell. That's nice. All right, we got this range. We finally got this break of structure here, and we're looking for this key break of structure. That's the key break of structure I'm really looking for. It's not that one. That's a nice key break of structure that we did a bearish move. That was great. We've been breaking little small bearish break of structure all day long, but this is a very key break of structure, and it looked like it had a hard time breaking it and falling through, right? So it broke it, not quite, and now you have 3 days of bullish momentum. Well, guess what? That's it. It did, it tried, it's done, right? And it's gonna have to pull back now. Right. It did a pretty good job in trapping a lot of traders, what it did. So a lot of liquidity build up here. So it's got to come back. Let's get some mitigation. Let's go ahead and manipulate more traders thinking we're going to, USD JPY is going to go back and do what, right? Think about it. USD JPY is going to be a very sensitive pair for the simple fact that a lot of people got smoked trying to short this, and a lot of people probably got smoked trying to long this too, because there's been a lot of pullback, and then you had a big flash crash there from the intervention, right? And people don't want to miss that. So there's going to be a lot of panic in here. So I would say this: if you want to buy this, it's okay to buy. The real trade is in the sell, right here. So long term, I'm embarrassed, but there is an imbalance here. Right, I can't lose the fact that there is imbalance here on this market structure. So there is a great likelihood that with the dollar weakness coming out, yeah, we can come back and get this. So we'll come back, probably get this. I wouldn't be surprised if it comes higher. So don't be surprised at that as well, right? So if you see this come up about, I'm looking at about 145. I'm looking at the structure of 145 before I start looking to sell. Right when I start to get about 143, 145, we're looking for market patterns. We're looking for patterns, confluence that says, hey, I'm having a hard time breaking a structure, starting to create a little bit of an arm, double top, or a head and shoulder, whatever that may be. And then we want to see the oscillation of the market here starting to be kind of overbought that says, hey, I think we're done. And then once that dollar weakness start to kick in, boom, this is going to be a nice fall. So this is our ultimate target right here that we want to see come down to 127. It is coming. This trade is not over. Let it pull back to about that area and then let it drop. So there is a 2,000 pip in the money for you, waiting for you if you want it. However, right now it's not the time to take that. But anybody want 2,000 pips? I'll take that, right? So if you want to make 2,000 pips, you want to make a good trade out of this, wait for this pullback right here, be patient, and then let's take this down. Okay, so that's USD JPY. The trade is still there. It's a very good setup. This trade is not done. However, it just can't keep falling, right? Fall off the chart here and make it that easy for everyone. It's got to come back. It's got to manipulate. It's going to play around here a little bit, but it's coming. 2,000 pips coming to a chart near you. Let's move on to the other JPY pairs. EJ. All right, so I had called this right here that I was expected UJ to pull back a little bit down and then come back up. It looked like it came to this area. So if we had a pending sell at 144, yours just got triggered. Okay. So that means, are we still looking to come down? Yes, we are. I don't expect it to come past 145. I do expect it to maybe come up, but if anything, right now, we may see a little bit of upside. So I will say there is a potential that we could see 147. So don't be surprised. I don't think it's ready to break this 144 yet. So this is kind of neutral, but the best trade still to the downside. So overall, long term, I am bearish. So if you were to sell now and it pulled back on you, don't worry, it's coming, right? This is a very, very extreme upside historically, right? Look at this, look at this. 2014, we haven't seen 149 since 2014. We saw 149 now. We're in an overbought conditions. You're in a good place to sell, right? So if you sell now and it comes back on you and you're like, damn, I know it got me in the trade a little bit too early. Hey, this right here, if you want to be patient, you can put a sell stop at 144 and just wait. But if it triggers you and it comes back up, then you're going to be sitting there in a drawdown. So don't go heavy, right? Get ready to do what? I will go sell again at 147, right? So this is a good trade coming up, okay? We're looking for a potential trade in terms of this. I could see it come all the way down, gives about, you know, a nice 932 pip trade. I am looking for this thing to come in all the way down to about this area for sure. Just a nice area of structure. So about 900 to about 1100 pip trade. So EJ is coming, except it's just not going to come fast. It's going to be in one of those nice ranging. But out of all the JPY pairs, this is not really a good, easy trade setup. So just be careful. This is the least of my favorite on the JPY pairs. So a little bit upside to EJ, what I'm expecting before it goes down, but it will be coming. Okay. GJ, it's another one of my least favorite. It used to be one of my favorite, but currently, out of all the JPY pairs, this is my least favorite. Right. I expected to come down a little bit more. Well, it didn't do that. It went up instead. So it went up earlier than I expected to, but I did expect it to go up. So now it went up. So how much more could it go up? But it could go up a little bit more to about I would say about 168. That is a possibility. I don't think it's going to take 169. So if it start to turn, then this is a good place to start selling. If not, put a pending sell stop right here at 165. You see this line right here? 165. I've been telling people place a pending sell at 165, and you can put another one at 168 or one or the other. I'm sorry. That's just two very, very close, but you know, you're looking at about, well, that's okay. That's about 268 pip difference. That's okay. So put a pending sell at 165 for it to come back down, because it will be, or you can put a pending sell at 168 if it's going to come up and touch that, right? I think this peak is about as high as we're going to go. We haven't seen this peak since 2015. So we're at a very historical high on GJ. So it's the same difference for EJ, right? It's bearish long term. So, however, it's going to manipulate a little bit, but I like to put a pending sell at 165. Hold on, let me make a note here. 165 GJ to sell. Okay, so sell right here and put another pending sell stop pin and sell limit at 168. Now, if you would have done that at this level and put your TP here for that target at 160, unless you want to trail it and see how far you can go. But if you were to put this at 168 and 165, and you put those pin and sells, you know, those trades, look at from here to here, that's 500 pips. And then from 168 down, that's 700 pips. So look how many times that had, you know, came down and touched that. If you would put the sell here, we got one here, right? This is one of those trades that it just basically sell, went down, went further down, but you still got TP here, went up, sell, probably took both of your orders, came down, hit it, nice, came down, took a sell, almost took that one, but you probably could have got into it, maybe with a spread, came down, took it again, look at that, came back up, came back down, got another 500 and something pips, right? So this was, yeah, 500 pips. And then it came back down and came back up again. So it came here, triggered that. Look at that, it just ping pong up. Rolled that for a little bit, came back up here, triggered that, triggered that. Guess what? TP on both. Nice, nice. Those are all money that people could have been, you know, just taking advantage of this trend and this range. And that's how you trade it. Came down, triggered that, came back, TP. Oh, that's money right there. Came all the way up, scared people, triggered that, put you in drawdown. And it came back, didn't trigger that, didn't get you out of a trade. It came back a little bit. So you're probably holding this. And if you're not in any of this trade, might be a good opportunity to get into it now. Entry sell stop here and put a sell limit here at 168, 165, TP at 160. It will be coming down here if you want to hold on to it long term. That's what I'm thinking. It is. I'm anticipating it to come all the way down here at 147, and that's my marker I'm going to put right there. Those are nice areas of confluence. Look at that. Nice areas of confluence of where liquidity has been grabbed, and I would expect it to come down and do some more liquidity down there. But for us, we're looking for areas of where we want to come in and grab some liquidity too, right? We got to trade like a market makers. So that's GJ. All right, so my favorite trade besides UJ is SFJ. Oh my, this is my SFJ money trade. For those who are in sell, forever hold your peace and hold that position. It is coming, right? Look at that. That is a nice move. So we're looking at a nice, from where it's at, we got about another 1,700 pip drop that is coming with another altogether potentially 3,000 pip, okay, from where it's at now. So this trade is not over. So as you can see, it's been ranging like one stubborn don't want to go, as if it knows everyone is waiting, right? And some people are just frustrated because they've been stopped out. They don't know if it's going to go long, thought it was going to go short, thought it was going to go long, thought it was going to go short, and they're just stopped out. Us, every time it pops, we're selling. Every time it pops. In fact, we got pending orders sitting right here at two areas. Right, we got two areas of pending sales that we're looking at. We got about a pending sell here at about 148. Make it 149 even, if you will. And then we got another one sitting way up there. Let me go ahead and mark this. All right. So if we're probably in the money already for those who are in the trade, we're about 233 pips in the money. And if you were holding it up here, then you have an additional 360 pips. So you're about 500 pips in the money and holding on for the bigger money or scaling. And again, we probably got some trailing or some stop loss in protecting our entries. So if it comes up and tags us, that's okay. We're getting ready. We get back in. So we may see a little bit more ranging, right? We may see a little bit more ranging, and then it's coming, okay? It is coming. This is one of the biggest trade that is going to pay out a lot of people. And all we got to do is hold on to here for about, like I said, about 1,700 pips. But the biggest one is down here around 3,000 pips, okay? This is going to be a nice fall, but it's just not going to fall straight. It's just too easy to make money on this one. So there has to be a lot of manipulation going to be here. This is going to be one trade you do not want to let go until it come down. You may want to just kind of keep these, and every time it comes up, just get in. Don't take TP if you don't need to. If it comes down here, we will probably take an entry here, and we will probably take money on that one as we go down, right? So every time it comes up, we're going to pop. Every time it pops, we're going to short it. Pop short, pop short. You know what I'm saying? So when that market comes down and it starts to break here, we're going to short it here. It breaks here, just around this area, comes up, we're going to short it there. Short, short. You get what I'm saying? So every time it comes in here, you're going to have this moving average just starting to go like this. Right? So every time it's just that moving average, it's short, 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 TP, 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 reload, reload, reload. That's how we're doing it on our trade wheel. Okay. If you want to learn and be part of that, feel free to sign up and register so you can be part of that. CAD JPY, nice movement. I like it. Unfortunately, had a hard time breaking that. So just 5 days. Look at that. 1, 2, 3, 4, 5 days. That sucks. Didn't move. So I am still expecting just a little bit of a pullback. Much as I don't like it, but it needs to come back and pull back. So I am going to get back in once I get up here, 107. All right. So I'm still looking for this move. CAD JPY is my third best trade besides all the other all the JPY pairs. So USJ, Chef JPY, and CAD JPY. Look at that one, right? This trade is also not over, but it needs to come back up, mitigate a little bit, and then we're going to see about a nice 1,100 pip. But more importantly, I like to see this come all the way down about right here in this area to give us a nice 2,000 pip. That's going to be a nice trade. We are seeing some very good structural break, but this break of structure is going to be my key one. Once we see this one, I don't think we're going to come back and see this anymore, right? So we see the peak, had a hard time breaking that peak. Look at this. This is the monthly. That peak right here, 2015. We haven't seen that back before in 07, right? I'm sorry. Yeah, 2007, 2008, right? That was 2014. Man, that's a long time ago, right? So this is it right here. We're looking for this. We got a nice big imbalance sitting right there. We all know that it's coming. Market is way overbought. CAD JPY. Don't short it now, right? Obviously, don't short it here because we're short now. I'm looking for a small term bearish pullback, get this little bit of an imbalance, possibly get some of it with a maybe with a spike or something. So I am expecting a little bit of the upside, a little bit. I won't be surprised. And just I think I got a short here, and I think I got a short here. So I'm gonna wait to pull back and just hold on to it. CAD JPY is coming down. NCD JPY. Okay, NCJPY, I was expecting it to come down a little bit and then come up, so that didn't happen. In fact, it went up earlier than expected, right? So we came back up here to these highs. I don't expect a little bit more room than where it's at right now. It could come up here, give us another little bit of a high, and then we're coming down, okay? So a little bit more, if you're looking at the weekly, these highs has not been broken. Obviously, we haven't seen that back into 2015. So on a higher time frame, I'm bearish. This trade is not over. We got a long way to go. Look at that. We got a long way to go. So we're looking at potentially 1,200 pip drop on NCDJPY. This would be my next best trade setup, NCDJPY, along with RJPY. So that's my markup on RJPY. Look at that fall. Let me go to the weekly. We're way up here. We're way up here. This is all supply. This is all demand. So we are looking for this to drop. Look at all these spikes up, right? So we haven't came back up here. We've been having a hard time breaking this structure. So I can see, yep, I'm gonna leave it just like that. So I don't think we're gonna probably continue to play with that anymore. So I think we're probably gonna see a little bit more upside to this, and then we're coming down, right? So that is my ultimate structure here. I want to see this breakup structure. I want to see it stay below 92.54, but this would be my next best trade setup of the JPY pairs as well. And we are expecting to see another 1,400 pips. Wow, I just gave you guys like 5,000 worth of pips on just JPY alone over the next course of months. Now we are going to triple that and make that 10,000 pips by what? Reloading, sell it. Every time it pops, short. Okay. So that is our JPY. Let's get into some other pairs here. Let's go into EuroCAD. Okay, EuroCAD, what do we do? EuroCAD, oh, we went a little bit higher. That's fine. That's fine. It went a little bit higher, pushed up a little bit higher. It could even go as high as that, but I think it did its move. Market is definitely way overbought. It's pretty much about there. We're looking for this move to come up, about right there, and then we're going back up. In fact, let me go ahead and draw this line back up. Higher highs, higher lows. I like to see this come down to about right there, and then let's go. All right, there's several imbalances here, especially that one. So I wouldn't be surprised to see EuroCAD. I wouldn't buy right now. All right, I'm looking to sell EuroCAD to about 130, 1.34, this area, and then we're coming back up. But right now, not the time to sell it. I mean, not the time to buy it. It's the time to sell, look for sell. Okay, so EuroCAD is definitely, I'm looking for a little bit of CAD strength, looking for a pullback. I think that kind of makes sense with EuroCAD down short term, along with EURUSD, you know, to the downside. So maybe a little bit of a weakness of the euro. Okay, along with EuroCAD down, I'm going to be looking for a little bit of a EUR down, EURUSD, EuroCAD, EuroJPY. You're odd. Look at this. You see it? You see the theme? They're all looking to be on the upside on all the euro, right? EURUSD, EuroJPY, EuroCAD. This is your odd. This is what I'm looking for. I'm looking for possibly a pullback to about anywhere in this area, in this zone, right? At least to get maybe about 1.45. That'd be a nice area to start looking for a buy. So right now I'm short term. I'm bearish on your odd. One more, Euro NCD. Look at us, all this euro, right? So this already started dropping. So if you've been selling up here, that's great. I would say hold on to that. With Euro NCD, we're almost there, closer than anything. However, I don't think your NCD is done. I think it's got a little bit more to go. I can see it come down even a little bit more, right? So this is what I'm looking for your NCD. I'm looking to get to about, it's still not in my discount zone. This is my premium. So if you're looking at it from a fib perspective, right? It's still above in my premium, hasn't even hit 50%. I'm looking for it to come to about 618 right here, 786, or the order block between 786, 886. This is a great area, right? So even if you took a buy here at 1.65 and then it dropped a little bit, it took about a buy here at 1.61. Either way, I'm looking for a little bit more downside to your NCD. And I can't wait till it comes down, because this is where I'm short. I think I've shorted it already. I was short here. I'm in the money already. I'm putting my in the money trailing right now. I'm waiting for it to come down a little bit more. Once I come in my discount zone, ding, 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 let's go. I'll be ready to buy. And I'll be ready to take this up. Okay. So Euro USD, Euro JPY, Euro CAD, Euro AUD, Euro NCD. All kind of similar thing, right? Okay, what about pound? Let's go to, we see pound USD, that's supposed to pull back a little bit, right? Let's go to pound CAD. Let's look at that. Same difference, right? Oversold conditions, Euro CAD, just like Euro CAD was. It came this, did this higher highs, higher lows, higher highs, higher lows. We got this real big imbalance down here, right? Markets overbought, having a hard time breaking this high right here at the structure. Okay, nice. I don't think it's gonna make up to this structure here. I think we're done, just like Euro CAD was. So I'm looking for your pound CAD now start to pull back here. So this is my target. We got several targets in our trading room, right? Live trade room. We're looking at 155 even, and we're looking at about 152, right? So we got two areas that we're going to be buying from before it goes back up. So if it buys here, we got that one. If it comes down a little bit more, we'll take another buy and we're going to be going up. Okay. So pound CAD, we're looking for a couple more pullback. This thing has been really bullish, and we're being very patient, waiting for a buy. But we're definitely looking for a short on your CAD. So this is a great time to, I'm sorry, pound CAD. It's a great place to sell from the high and come down to get about maybe 358. So if you're not in the short now, short, we can turn to short, 258 pips, possibly 600 pips before we come back up. Okay, so that's pound CAD. How about pound AUD? Oh wow, yeah, pound AUD too. Good place to short. If you're not in a short now, if you are, congratulations, you're about 355 pips in the money. You probably saw as much as 680 pips if it didn't stop you out with a trailing. But if you're still holding on, you're about 340 pips in the money. That's great. Continue, because it's coming. I think we're gonna come back a little bit more down. We started to come down already. We got a couple of imbalances. Yeah, looking good. Right there, we got one there, and we got another one right there. So I'm looking for some more downside, right? So if I was to look into buy, obviously I want to wait till I get into my premium area, right? So we're looking from a fair from the swing low to the swing high, right? It's not in my 50% zone yet, so this is not where I can buy yet. From a fib perspective, this is now just starting to come out, give us a lower high, because this was a lower low, now it's giving us a lower high. Guess what? I'm looking for the downside. So this is the area where I would be looking to place pending buy limit, 1.71. And then another one would be a good place right here, would be 1.68. So it either is going to come down here and then go up, or it may come down a little bit more, catch your resistance balance somewhere in this area right here. Either way, these would be two great areas to go. For short term, I'm looking for a fall on your odd about 583 pips. Anybody want to get in on that one? Okay, and then maybe a little bit more, about 957 pips. That might be good. Get short, just like your CAD. Hello, similar thing. How about GP pound NCD? Pound NCD is a lot better position than the other two, means it went further. So if you sold it up here, which is great, you're about 1,127 pips. If you guys would have followed that, that would have been great. However, I do think there's a little bit more, just a little bit, maybe not as much as I saw on your NCD, but I think this area is definitely an area to where it could be entertained, right? To this area to where we're looking at some confluence. Hello. I think that might be a good area for UNCD to come down. I mean, pound NCD. We are in a little bit, just a little bit. This is the RSI. So we are in an area that this area of demand, right? But there is a potential that it could come down just a little bit more, and because it's been playing around the 50% level. So I am expecting a little bit more downside. I like to see it come all the way down to about 1.89. But then after that, we're going up. Right. So your NCD is actually a better setup than pound NCD. I would just wait to see how pound NCD comes. It's a lot more to trade on other pairs. Like this one has a little bit more downside to come. But believe it or not, between the NCDs and your pound NCDs, they were set up here. Right. So your NCD was a good setup, pound NCD was a good setup. If you're in that trade, you're now out of that money because it's been playing around this zone here. So we're in this area now. It may poke a little bit, but that's great area to start looking for buys. Okay. Other than that, there's a couple of trade setup. I think pound odd CAD was another good setup. Odd CAD with just hello. This is to get a place what to buy? No, sell, pull back. But it's going to be long term. I see this going up. So I see this coming back to about 0.88, maybe about 0.87. Right now, if you got into a sell up here, great. We got about another 181 pips. Right, NCD CAD's about the same type of setup. You know, odd CAD, NCD CAD. Ooh, it looked like a better setup than odd CAD here. Yeah, I agree with you. I think this is a good area to where you want to sell. So look at this. If you didn't get into odd CAD and sold up here, when price got about around this area and you missed this trade for 85 pips, or if you did get in that trade and you were waiting for NCD CAD, guess what? Right now it's a good time. I'm marking down my sheet right now. NCD CAD, sell now. TP will be around this area here, minus oil black. TP for, I'm gonna put between 0.8 to 0.79. Mark my sheet. Okay. All right, so sell now. But what if it goes up? I saw it again. Okay, yeah. Sound like I take two of them. Anybody want two? I take it. So we take this. That's 280 pips. If it comes down, I take another one. I can do another one, small lot size, and get 380, 280, 380. Anybody want 640? I'll take 640 pips. Guess what? Great opportunity to do it now, right? So pound CAD and NCD CAD are really good setup right now. Okay, pick one. Pick one. Long term. Look at this. I want you to think about this. Long term. We're down here. NCD CAD. All this is buy. Wait. So why are you selling? Well, it's just not going to keep going up, right? This is on a monthly. So long term, we're bearish. Long term, we're bullish. I mean, so short term, this is a nice move. So I'm looking for a small pullback opportunity to come from here about in this area, about maybe about 0.80 on NCD CAD, and then we're going up, right? Because just move didn't really give a lot of, pullback. No, not at all. Like I'm looking for a pullback like this, right? That pullback was 251 pips, right? I'm looking for a pullback of 260 pips. This is a nice pullback. This is not any pullback. There's no structure here. Basically, it just kept going, right? Create a couple of imbalances here. So I wouldn't be surprised if it comes all the way down here. If it does, that's another area to buy. But right now, we're looking to short, right? Let's short it, let it come down, let the market come down. Right, I'm giving you guys some setups. NCD CAD, really good setup. It's an edge. This is the time to short. Kind of just going up. Okay, short it again. I can tell you this, I don't think it's going to go way up there, right? If it does, everyone else will be in it, right? Because everyone else is in it. They're going to buy right now. They don't know it's going to go down. So shh. Okay, don't tell them. Don't tell them that they're getting ready to get, stopped out, right? They're targeting this. All right, so if it comes up, that's okay. We can't expect the market to come up another 428 pip without some type of mitigation. Come on, all right? Is it going to go up to? Is it going to go up there to that area? Yeah, it's going to come up to a 0.86. Oh yeah, the future near you, absolutely. It's going to come all the way up here. All this. But NCD CAD and NCD Chef, odd CAD and odd Chef are the most ranging pairs. Okay, these are the least of the trending pairs. Look at this. You guys see it? Look at nice 260 pips, 260 pip drop. All right, these are nice ranging pairs. You don't see this like UJ and EU and things like that. This is a nice ranging pairs. This is on a daily that's giving you, ranges of 260 pip at a time. All right, so we're looking at a range like this. That's 900 pips, and then this is a nice 1,000 pip, and then you got a nice 500 pip pullback, and then you got a nice push up 590 pip, and you see this like 650, 500. I thought it was 200, but I'm looking at a 260 pip pullback. So these are swings of 1,000 to 500. These are nice swings. Okay, so if you look at it, you don't see anything that just goes straight up that says, hey, this is going to go from here to here at 1,300 pips, like GJ. It's going to come from here to here at 1,000 pips. No. Even in that 1,000 pip range here, even in the 1,000 pip move from here to here, that's 1,200 pip. But odd CAD, NCD CAD, odd Chef, and Indie Chef, they're very infamous for pullback. Right. So in this 1,300 pip move, there was a 389 pip pullback, right? So that's what we're trading. We know this move is going to go pip here for NCD CAD. We're trying to catch this one. So if we want to short this is a great opportunity to get some money, right? Nice pullback, and then go long, right? So that's where we're at right now. Right there. Pull back, get a nice little pullback, and go up. All right, awesome. So we'll probably put that in our trade room. Brad, anybody else or any of our coaching students, whoever's watching the video, that's a great opportunity. We'll follow that on Tuesday, Wednesday. We're gonna have 2 days of live trade room this week, and then we'll go ahead and wrap it up for the week for the holidays. Okay. Other than that, guys, I'll get this recording up. Hope you guys got your game plan together. Looking for some great pips, great money, great year, and then we'll have a better year next year. That's for sure. Okay, guys, get one. Hope you guys have a great opportunity. Hope you got some great setups. All right, so you guys have enjoyed the rest of your Sunday. Bye-bye.